So good afternoon, everybody. I think it's an honor. It's an honor to be here. I think you all could experience a wonderful story brought by Daniela, but I think also the amazing story of Belron. So I try to keep it as inspiring as they could bring it, because I think the story of TVH is, in my opinion, a very beautiful one. I've been working for TVH for almost 20 years. It went by like, how do they say, een vingerknip. So every day was a beautiful day, a nice day. Every year was a year in which we could do a lot of interesting things. Contrary to what the other people did, bringing a video at the end, I want to bring it in the beginning. People that have to give a presentation just after a lunch don't always have the best moment. But I think if you see the video, I think it gives a good feeling. What is TVH? What are we doing? And then I try to explain it. All right. I have also with me, of course, Mark, but I think Mark will introduce himself in a bit. But I would suggest enjoy the movie.
When customers all over the world rely on you 24/7 to keep their equipment running, innovative business practices and a personalized customer experience are key. Whether you talk to us in our global headquarters in Belgium or one of our regional headquarters, or you talk to us in any of our other branches, TVH is always about understanding its customers' needs. We are the global supplier for parts and accessories for material handling, industrial vehicles, and agricultural equipment. If you need a part, any part, you'll find it at TVH. Our e-commerce site and highly automated warehouses make it possible to deliver any part within the shortest time frame. And if you don't need to replace, but just repair the part, we've got your back on that one too. At TVH, we understand that nothing speaks louder than meeting our customers' expectations by giving them better product information and by sharing our know-how and expertise through industry-specific education programs. That's what we mean by being a reliable partner. TVH, the passion, the people, the parts. It means optimizing processes. It means constantly innovating. It means always doing better whenever and wherever possible. That's right, we've got it. And we deliver it by road, air, or sea. With branches all over the world, TVH delivers quality products with excellent service provided by the most valuable asset we have, our people.
Thank you for calling TVH. Have a great day.
So what you see is what it is. You see passionate people working every day on parts. The passion and the people is really what makes the difference. But the downside of showing this video is that you think we are box movers. We buy products, we take them in stock, and we basically ship them to our customers. But that's not the case. So I will try to bring to you. In an hour. It will be challenging. I know it for sure, but I try to keep a focus. So what we are, what is TVH? Where are we in the market? What is our market positioning? What's our ambition? That's current trading. Mark will give an update on current trading and sustainabilities, and I think what you should remember after this presentation. But to start with, TVH. TVH keeps you going and growing. That's our purpose. That's our purpose in life. And it means we want the machines of our customers that they keep going. And how do we do that? Of course, by selling spare parts. And if our customers are doing a great job, they will grow, they can attract other customers, and as a result, we, TVH, will grow as well. So the keeps you going and growing is important. We give a service. In the end, we give a service. A customer needs to be helped. We want to make it easy for our customers. We want to make sure if they call us that without fringes, in the end, the parts is shipped as quick as possible. It was not built overnight. Our journey is one of almost 50 years. If I go back in the past, and we started in the market, we call it the material, MPA, because TVH plays in 4 markets. The material handling, MPA, we play in CPA, we play in APA, and IPA. What do I mean with that? It's basically the machinery for which we have parts on the shelf. It started with the material handling. That's our core market. That's, I think, where we excel. That's where we truly can say a one-stop shop solution. So, dear customer, don't worry about it. We know what you're talking about. We know your brand. We know your equipment. We know what parts you need, and we can ship it. We have it on stock, and we can ship it overnight. So that's where it started. But as you try to do a good job for your customers, you see your customers evolving in new markets. You see them basically trying to, for instance, take on another line of equipment, for instance, cleaning machines. They could be active in forklift trucks, and then they say, okay, why don't I do something else? Maybe it's cleaning machines, maybe it's access equipment, and we, TVH, we evolved with our customers. We said, okay, we can help them because we understand what they need, because we have also maybe these parts already on stock. So gradually, TVH moved from, say, the MPA market, for instance, in the IPA market. We saw that it was working, and we said, okay, let's try to do another bold step. Let's try to go into other markets. We did an acquisition, Bepco. We went into the spare parts, the aftermarket for agricultural machinery. And recently, deliberately, we went into what we call the CPA market, because we were already entering that market by selling spare parts for access equipment, but now we also do it for small earth moving, SEM. So basically, the 4 markets in which we play, and I think you see the equipment, just to make it more tangible. So the forklifts, the cleaning machines, the tractors, the agriculture tractors, and the skid steers, the mini excavators. And interesting enough, if you start to plot it on a map, it's basically what I would say the journey of our life. So we have spare parts that touch the machinery to grow crops. We have spare parts that you need to build infrastructure, to maintain infrastructure. We have spare parts to do a fantastic logistics. So everywhere that you can look around, there is a spare part in a machinery. So it made us TVH. It was crystal clear during COVID, an essential business, for instance. So spare parts, that's what you need to keep machines going, right? Okay, where does this bring this TVH today? At TVH, we quickly saw if you want to grow and you want to stay in Belgium, you might not grow big. So we quickly said, let's go international. We quickly went for an international customer base, quickly going to 180 customers. So on an annual basis, we sell spare parts to customers in 180 countries. So I would say that's a very international business. We followed our customers. We worked on our footprint, and over the years, we've built branches in 30 countries. So we became a truly global player, having a physical presence in a country. So with salespeople, with stock. So basically very close to our customer, because that's important. A customer cannot wait. If the machine is down, he wants the part as quick as possible. Today, 5,000 people working hard every day, working hard on what? On technical knowledge, for instance. TVH is adding on a daily basis references to its database. We know the machines, we know brands, we know the spare parts on those machines, we know the technical drawings, we have pictures, and we do that, and you have to say we have it also on stock. So today we have almost 1 million references on stock. Not sure if you can capture that. Dieter was asking, okay, can you present something? Dominique, can you bring some spare parts? Yeah, I said that's a difficult choice you ask, so we didn't do it. Okay? We have selected markets, and I think it's important. I think that's an ambition. You want to be a leading company in the markets that you've chosen. So we, because it was our core market, that's how it started. I think we dare to say we are a global leader in the material handling. We are also a leader in the MUPS, mobile elevated work platforms, and in telehandlers. That's what maybe a niche market. And we are definitely also a challenger if we talk about spare parts for agriculture machinery. If I would twist it around. So these icons that you can see is an illustration of the markets in which we play, but more on an equipment type. So you see the market in which we have, I would say, a good market share. And on the right, you see small earth moving. So for those, if I talk about a skid steer or an excavator, if I talk about tractors, definitely what it means. And we have grown. I think the business of TVH is one like every day you make a small drip, and then all of a sudden that becomes an ocean. We kind of seek how we can grow with our customers. We started in EMEA in the material handling. And then we went to the access equipment, for instance, and then we did some acquisitions. We went to the Americas, and from one thing comes another. So you have to understand it's like a very intertwined. It's on a daily basis, because at TVH, what is that? Every day we have to kind of work to perfection. We have to add the right parts to our offering, and we need to ship them. And the chain of things that happen between buying a spare part, putting it in stock, make sure that if a customer calls us, that we understand what he's talking about, make sure that we pick the right parts in the right quantities and ship them. So it's a lot of small steps that makes TVH successful. And we do that every day, and that's how we became, what should I say, a market leader in EMEA and a market leader in the Americas, with still opportunities to grow, for instance, in APAC. If I talk about APAC, in this case, you need to read Asia, Oceania, definitely growth there. China, that's a different animal. That's a different animal. It's for sure a big market. It's a market in which today we have deliberately said we only want to be a niche player. It's complicated. Our core markets are EMEA and the Americas. That's where the big dollars are, and that's where we have to go after. I've said in the beginning, and I've kept saying it a couple of times, TVH cares about the customers, and I haven't said a word about it. So let me try to explain the customers of TVH. We are B2B. We are a business service, B2B. We don't sell to everybody. We sell to the professional people that know how to repair a machine. We want to keep their machines alive, and we want to keep the machines of their customers alive. That's the core market. So the professional people, the professional repair companies, but of course, over time, it has evolved. So we are also active in what I would say, the resellers, people that buy from us, and that could sell to an end user. And one that is an important one and a growing one within TVH is the rental houses. And the rental houses is an interesting customer base because they have a big variety of machines. And I think that it's also to the core of TVH. We can help them with a broad variety of machines, whether it's access equipment, whether it's a skid steer. We believe we have it, or if we don't have it, we should have it. To be complete, we have a couple of small manufacturers to which we sell, and in some countries, Belgium is the exception to the strategy, so to speak. In Belgium, because of the fact that we are here, yes, people could walk, and we have a counter, and we could sell to end users. We could sell to people that own the machine, a production company. So but that's more an exception. So the B2B is what you need to remember. So what does that mean, giving a good service? I try to explain it. Our vision, we are committed to deliver the parts and the services to keep their machines running smoothly. So that's in the end what we do. And I said we are a service company, we are not a box mover. And so I want to zoom in on two topics, and it's, for instance, technical services. So if a customer comes to TVH and he does not know the part, we will help him identifying the part so that we can ship the part. So if a customer calls, he could say, okay, this is my brand, this is my model, this is my type, and I have a problem. Can you help me? Yes, we will try to help him, and I know we will help him. So we have a lot of people, not only in Belgium, in several countries, identifying the parts for a customer so that we are able to make a quote, hopefully can make a sale, and can deliver the part. Another one is TVH University. As TVH, we have the technical information, but we also give the technical training to customers. Customers that say, okay, I have technicians, the machines become increasingly more complicated. Dear TVH, can you give our customers training? Can you give them training how to do error code analysis, for instance, just a small one. We give training to customers, for instance, to make sure that their people in the after-sales department do an excellent job. So we go very wide. We go very wide, and in the end, of course, we want to sell a part. Impossible to give you a flavor of what we have in our offering, but just listed a couple of things, coolings. So we have it from something very small to a mast to big attachments, so tracks, forks, tires, you name it, we have it on stock. So something that you can put in a bin location in a small shelf to something that doesn't even fit on a pallet. So a very big variety of parts, sizes, dimensions, weight. So we need to have it on stock. And if we don't have it, if we can't buy it new, we also do repair. We reman. So there are customers that are saying, good, a new part is perfect, but maybe my machine has an age. Maybe I don't need a new part. Maybe I need a reman part. Maybe I need a part that has been remanufactured and that has the same quality, but it's not new. So we repair axles, transmissions. We repair, and I think that's something where I think we are unique in as well. We repair joysticks. So technical electronics we repair. 100,000 a year. So we have a big team in Belgium. We have a good team, a big team in the US. And I think that's definitely what makes us unique. And to go one step further, in the last years, we also ventured into the telematics, so the track and trace. So the monitoring, so that just gives you the flavor of the TVH. TVH is not just a box mover. We give a service to our customers. So our market, so where does TVH play? It's a huge market. If you go to the left side, that's not my number, that's what research companies say that it is. So it's a big market, but I would like to go to the right, and that's a number that TVH kind of, we calculate and we try to assess our own market. And I would dare to make a statement, it's actually understated. That's a number that we dare to commit it, but it's an understated number. Why? Because for some of the equipment that we have in our offering, we do not have the data. We don't know how many machines are sold into the market on an annual basis. We also carved out 3 countries which are in our market also big: Japan, India, and Russia. Why? TVH, we have a presence, we sell there, but it's not the biggest market of us. So if you really want to make it a fair number, we said, let's take it out. And just to understand, where does TVH play? We play in the aftermarket, so we play once the warranty period is over. And that's an important one, once the warranty period is over. So also that is being taken out. Although we for sure sell parts to machines that actually are just being sold, simply because the customer wants the part, he can't be helped. So for sure, an opportunity sell we do. So how does it work? A machine, I just maybe some explanation, otherwise. So a machine is being sold. Typically a customer, he can have, say, 2 or 3 years warranty period. In that warranty period, the parts are not his problem. For TVH, when does it become interesting? Once the warranty period is over. If the warranty period is over, this is the market in which we want to play. So we want to understand which markets, which machines are being sold. That's, I think, important in order to prepare our offering, but it's not our market. Our market becomes interesting when the machines have a second life or maybe a third life. So really long time. So forklifts, how long can they last? 10 years, 15 years, even 20 years. Tractors, agriculture tractors. It's very hard for a farmer to basically take out his tractor and to bring it end of life, so to speak. So the more machines in the market, for us, the more interesting, because they have to be kept running. Again, this in my opinion, an underestimation, but nevertheless, it gives you the flavor of how we see the markets evolve. And I would say, have a look at the big buckets. The big buckets, so the big bucket is the material handling. That's where we play. That's where we have a good market share. And then you see 2 markets in which TVH starts to work. SEM and tractors, almost equally market size like the material handling. So it just gives you a flavor of what we believe are the opportunities still to go after. And yes, telehandlers and MUPs, I said we have a good market share as well, but just try to understand how much smaller those markets are. Okay? TVH has a unique position in the market. This might look like a complicated slide, and actually it is. But it's not easy to explain where we play, and so it's a simplified slide as we try to do our best. How to look at it? So you have the 2 axes. One is the number of markets in which we play. So remember, we play in 4 markets. And then it's the product offering. So the product offering from very narrow and focused to very broad and deep. So if you go to the, let's say the blue boxes at the bottom. So the blue boxes at the bottom, just as an illustration, typically an OEM plays in one market or in a couple of markets that they've selected. And of course, they need to be able to sell spare parts for a period of time. If you sell a machine, okay, there is a certain commitment. The OEM needs to have the spare part. So the OEM is at the right side for a market in which the OEM is playing. For its own brands, they have a good offering. On the left side, there are some players in our market, and if I say our market, I mean the aftermarket, because this is an illustration of the aftermarket, that have a focused offering. So for instance, they decide, okay, we want to be an aftermarket player, and we only focus on one brand, or maybe even on one type of machine. So that's at the left, that's on the blue. And then you have aftermarket companies, or you have spare parts companies, and they could be either a manufacturer or they could be a distributor. And they have maybe, they are active in multiple markets. If you are a filter specialist, you offer a wide range of filters, and you offer it, okay, to anybody who knows about filters. But you have no focus on the market. In the end, you sell to a lot of markets. And what TVH tries to do is do a combination of both. And so we play in the upper right corner. We say one-stop shop. We try to have a broad offering. The one-stop shop promise is a promise that we try to make alive every day. So when we go into a market, we want to, it's hard for us to say, no, we don't know what you're talking about, or we can't help you. So we really have to make a difference, and so it means we have to invest a lot. And or if we make a selection or a decision to go in a market, we have to invest a lot to basically make sure that the offering is broad enough so that the one-stop shop promise is alive. Because it's difficult to explain to a customer if you give a perfect service, for instance, in material handling, and then he contacts TVH, and then he says, okay, can you help us on construction equipment? That there is an unbalance, because we will start to destroy our promise. So that's why TVH plays in the upper right corner. We have competitors out there that, for instance, could select one market, and there they also have a broad offering. So I'm trying to explain that there are multiple combinations possible in the market in which we are active, and that TVH kind of goes for the most complicated one. This one is even worse, I guess. What I think you need to remember here is that TVH is kind of a spider in a web. We buy original part. We buy from the companies that manufacture components for machinery, but we also buy from alternative manufacturers. So we have a very broad supplier range, and it's the knowledge of the people of TVH to understand, okay, these parts I can buy, or I have to buy, or I want to buy from a specific supplier, and if and more often have choices. Of course, it goes without saying that the more we buy from alternative manufacturers, the better the margins. Okay. In the end, I think what is important, it's not about selling a cheap part, it's about selling the right part. So the fit, the form, and the function is important. We don't sacrifice, we will not go to an alternative manufacturer for the sake of saving the margins, because that's a very short term. So we try to buy from the right supplier, the right parts. And the spider in the web is that you see, okay, the market has evolved, the market becomes, what should I say, agile. Manufacturers try to sell as deep as possible in the market. Even the manufacturers of components tries to sell. We try to buy from everybody, so to speak, and try to sell to the professional customers. If I say TVH has a unique presence in the market, I would also dare to say that TVH has a unique operating business model. First, it's about parts availability. We've never sacrificed, so to say, on working capital. Mark will explain. Having the part on the shelf is where it starts. It's good to know, to say to a customer, I know what you're talking about, but if your lead time is a couple of days, if your lead time becomes a couple of weeks, forget about it. The chances that you do the sale drops heavily. So having it on stock is key, having the part on stock. Just to give you an illustration, we cover more than 600 brands. So it gives you an idea of the knowledge that we've been built up over the years. And And if a customer calls, and I think we give you one data point, for instance, on the material handling, this is the offer rates that we have. So it gives you a feeling of the knowledge that we have and the fact that we can make the offer because we have it on stock. So parts availability is one. I explained about the fact that we know a lot of suppliers. So the parts sourcing is another one. So the parts sourcing is something that the people, we call the technical people in TVH, the people from, we call the team, the materials team. That's what they do every day, trying to understand, okay, what are the potential suppliers out there? Where can we buy? Where does it make sense? And if we can't buy it, what can we do internally to also help a customer? So for some items, we have workshops. We have a couple of workshops. We will mill a part. We will milk a part if it's needed, and of course, if we have the capabilities internal. Parts availability, parts sourcing, key digital capabilities. TVH, we started in the years 2000, early 2000, went for e-commerce, developed internally what I would say an e-commerce platform. So the digital capability of TVH is one that is important. I explained the fact that we have a deep knowledge on spare parts. We have 44 million references in our database, and if you know how much thousands we add on a monthly basis, just to make sure that we understand what the customer is talking about. But once you have such a huge database, you have to invest to make it easy for the customer to buy a part from TVH. So that's the digital capability where we heavily are investing in. You see the pricing engine, that's something that we've developed internally as well. I think that's, I would call it state of the art and a differentiator. And the telematic solutions I also have mentioned already. So you understand, so the parts availability, the sourcing, the digital capability, and the supply chain. I started the presentation by showing you a movie, again, in my opinion, a nice movie, and you saw the degree of automation that we've done, for instance, in Waregem, and for instance, also in the US. That's an automation we don't do on every site. I hope you realize that in some countries, we have a branch and we have wonderful people there that pick the parts on a daily basis manually. But the fact that we ship so much to customers and that the customers expect to receive it next day means you need to be able to process the order in a very short period of time. So the customers, they wait because they might need another part, and they keep waiting and they keep waiting, and there might be commercial reasons why they keep waiting. For instance, if you reach a certain threshold, it's maybe freight free. So whatever, there could be good reasons for a customer to wait, but then the customer expects that he receives it, if possible, next day. So 95% of what we sell, we can ship the same day to arrive the next day. Of course, if it's bulky stock, forks, masts, no use, you can't pay it because it becomes way too expensive for us or for the customer. But again, the fact that you are able to process orders in a very short period of time is important. And that's why we've invested heavily in automation. Right? If I say TVH has a unique model, I dare to say that, but I think it's also supported by what customers are thinking. So this is, for instance, one of the latest surveys that we've done at the end of, in the course of 2021, and it gives a flavor of what is important for a customer. So the wide assortment is very important. The quality is important. So people might say, oh, you're not, so to speak, genuine, but in reality, that doesn't work. So we have to sell a quality part. Attractive pricing is important, but it's not necessarily even at the top. So the availability is important. So knowing it and having it on stock, to have the trust of the customer that in the end they will receive a quality part is important. Why is that important? Because a filter of, what should I say, 10, 20 euros, you can, it's maybe not a lot of money, but in the end of the day, if the customer has to go back to do a replacement because it was not a good product, costs a fortune. He has to, and basically he has a customer that is unhappy. So it kind of spirals even to us. So we need to make sure that the customer trusts the quality of a TVH part. Two other ones, outstanding technical expertise and an enjoyable customer experience, very important. And you see the ranking, you see TVH has been quoted either number 1 or number 2. If you talk about those criteria, you could say, Dominic, you're talking about the technical knowledge of TVH, but it's actually the lowest percentage. Why? Sometimes it's the perception. Again, our competitors are the OEM, and damn sure they should know better about their own brands than TVH. I think it would be almost a very big surprise. But nevertheless, we every day try to work to give an excellent technical service there as well. It may be not the Belron NPS score, but I think we're getting there. And I think it's one to be proud of. I think 46% and 46, not percent, 46 and increasing, I think is a good job. Had a discussion at noon. What do you think about the 46? Again, I say it's understated because I know, because we track it on a monthly basis. So we do relationship surveys with our customers. And we also ask feedback. So next to the score, we also see the comments. And sometimes they say, why would I promote TVH so that my competitor can do a better job than me? So we lose points for sure because of that. I think one of the other things, TVH is, in my opinion, a unique company if it's about the culture of TVH. The culture of TVH is something that we have been working on for many, many years. And the We Are One baseline is one that everybody at TVH knows. The We Are One was introduced because we became an international group. We were coming from Belgium, and we were kind of saying, how will we educate them in how we want them to be as a company, how we want them to be the culture of the company, because they will have to hire people, they have to search for people. How will we explain the culture that we would like to see within our companies? So We Are One is the baseline. The acronym is PARTS. So we make them, we revamp them a bit to make them a little more stronger or bolder. So you see them pursue excellence, act with joy, remain open-minded, take initiative, and show courage. That's kind of what TVH stands for, again, under the umbrella, We Are One. TVH is a young company. You could say 50 years, but but actually it's a young company because a lot of things are happening in the last years. A lot of changes are happening in the last years, and one of them is what you see, is creating a leadership team. I can only say I'm happy with the team that we have on board. It's a good mixture of people working many years for TVH, knowing where we come from, knowing what we've been doing for many years, knowing what makes us successful, knowing the pitfalls, and it's strengthened with young people from the outside. So it's, in my opinion, a very good combination. No politics. I think I love working with them. Completely different topic. And it's about M&A. I'm not sure. I'm trying to take away that TVH is something that has been built like a combination of acquired companies working standalone. That's not the case. So if you would drill in our financials or in our figures, the M&A is something that we do to basically accelerate what we do. Accelerate the market in which we want to play, maybe enlarge the customer base, maybe enlarge the knowledge base that we have. And it's something that we've been doing for all the years. So within the TVH organization, everybody understands the value of M&A. Just to give you a flavor, on an ongoing basis, we are having, say, 150 targets on a watch list, companies that we've met in the course of our life, through fairs, whatever, and start to interact with. And in the end, they are not all active. 10 plus minus are companies in which we are having an active dialogue to try to understand, okay, what makes them unique? If we would, are they interested to join TVH? And if they join TVH, what strength do they bring to the organization? That's you see the flavor, pretty international and also pretty diverse in the markets in which we play. All of this, of course, is part of a strategic plan. Maybe I bring all of them. So every part counts is the baseline of our strategic plan, and it's basically 11 building blocks clustered in 3 pillars. One is about strong foundations. The other one is the must-win battles, and we're sure that in the end this will deliver a profitable growth. Strong foundations, people. What does TVH have? It's basically people that have knowledge to do something. So we definitely invest in people. Okay, just again, I don't want to make this a competition with Belron, but the employee engagement score, for instance, of TVH is 80. So just to give you the feeling that it's important to, and that we try to take care of the people of TVH. We have nudge programs. We try to motivate them to keep moving, to stay healthy, just you name it. We invest in our people. Sustainability is actually at the core of TVH. We keep machines going. So as long as we keep them going, they won't end up in a scrapyard. So sustainability is at the core of TVH. Of course, we can do much more. Mark will explain much more about this. And the third foundation, if I may call it, is the one way of working. It's one way of working to try to explain to the people you have to work with excellence. You have to strive for excellence, not only for customers, but also employee. Excellence in the way we do things. The must-win battles, omni-channel. If I say TVH is digital, you think about e-commerce. 80% of what we sell is online, 80%. But omni-channel, we can do much better. We can make the journey for our customers much more aligned, digital, smoother, more efficient. So that's one. But if you want to do it right on the omni-channel, in our business, data is important. So if the picture is missing of a part, if the picture is not clear, if the technical data is not in your system, it could make a customer doubt whether to place an order, yes or no. Technical knowledge, we should never forget where we come from. So keep investing in the technical knowledge of TVH is instrumental. And then you see a last one, TVH Innovatis. TVH Innovatis is a big program. We want to do a step back as well, because we believe we can better streamline our processes internally. We also should do a step back to try to think, where do we want to go to? TVH Innovatis is actually about how can we keep on growing as a company. That's the need of Innovatis. And all of this to realize profitable growth in the core markets. Again, the core markets, or the 4 markets that we've selected, and the core regions, I've explained to you, Americas, EMEA, that's where the dollars are, that's where the profit pools are. And on top of that, we want to accelerate by investing in SEM, small earth moving, and the BEPCO, so the Agri Booster. So all these things are additional layers on top of a core growth. But finish for me, Mark? give you the floor.
Thank you. So when Dominic was referring to the young people that joined the management team, I was thinking that he was referring to, amongst others, myself. So I joined in 2018, so it's been almost 5 years, and I can say it has not been boring years. So back to the, I would say, to the presentation, the content, sustainability. It's been said this morning, and I think it's been said as well in the other presentations. TVH is a family-owned business, and so thinking long-term and thinking sustainable is something which is part of our, I would say, the way we do business. And it's also, I would say, in our business. And Dominic has referred to it. We are keeping machines go longer, decades. So when you think about TVH, the core of our business is actually doing things sustainably. When we repair print cards, when we repair parts, we are working on a cyclical economy. So in and of itself, I would say our business is, I would say, about being sustainable. But we realize as well, and in recent years, I would say we were gently pushed by external factors into saying, let's raise our game. So in 2021, we explicitly said sustainability is part of our strategy. We hired a sustainability manager and put in place a program. We're fully busy doing that. So we've selected a number of sustainable development goals as the ones that we want to focus on. We're busy on baselining KPIs on that one and working out the initiatives that will support our goals. So as we speak, I would say this is taking quite a bit of our attention at the board and the management level to make sure we are clear on what we want to achieve. Now, also a little bit about my core area on financial performance. And I want to say we're not a company that exactly is sort of like has a culture of saying a lot to the outside world about our numbers. And so if I'm bringing some news here, I hope I would say, happily surprise you, and if not, sorry for that. A word about our history in recent years. So in terms of turnover, we are a growing company. If we take back a longer-term view, since 2005, we've been consistently growing at around 8% up until 2019. So, in fact, I mean, I would say, we're used to a long-term growing and long-term going. In 2020, COVID hit us, and we did take a hit, but at the same time, when you look at our business, we see ourselves as being fairly resilient. If you compare ourselves to OEMs, we did, in fact, pretty fine. We did not have a single month in 2020 when we had to worry about a negative bottom line. So we pushed it through. And in 2021, as you can see, we've rebounded quite nicely with 17%. Bottom line, EBITDA, we've also taken a hit in 2020. I would say not surprisingly, but also not dramatically. As you can see, we still finished the year with the 80.4% EBITDA margin. And again, in 2021, we rebounded, and we rebounded with an even higher rate than our turnover. So all in all, our operating leverage increased. And the way we think about it, the way we handled in 2020, we took I would say, through the cycle view. So we did not push down our investments in people. We did continue to work on our strategic plan, and luckily we did so. Luckily we did so, because the growth that we've seen in 2021 would not have been possible if we would have not been able to keep our people on board to handle everything. So overall, I would say we look back on a 2021, which was quite nice. A little bit on our mix of business. On the left-hand side, you can see the mix by region. We think of ourselves as a globally diversified group, and that is the case. At the same time, you see that there are two main regions, EMEA being the biggest one, and maybe surprisingly as well, the one with the largest growth from 18 to 2021. And so this is in euro terms, of course, so there's a bit of an effect on the US dollars sometimes year on year. But overall, I would say we see our core market in EMEA growing very nicely. Americas as a second biggest region, growing close to 5%. And then, of course, we have the much smaller regions of APAC and China. On the right-hand side, you have it split out by equipment market. So our core market historic keeps on being MPA. So it's the largest market segment, and it shows slightly slower growth than the other segments. So construction and industrial and agri are markets that are growing much faster than MPA. Historic CapEx. I would like to say, when you make a comparison, when we think about CapEx, it's everything. So generally, we've been spending 3 to 5% of our turnover on CapEx, with a little, I would say, reduction in 2020, or a lower spend in 2020, but which was maybe more, I would say, a timing effect and a deliberate, I would say, delay of investment. And when you think about CapEx in our industry, it's three things. Right? The main thing is warehousing. We own the largest part of our warehouses ourselves. In all our strategic sites, we own the warehouse or the office building. It's a deliberate choice a historic choice of doing that, and it's been paying off. On the second category is IT, and then there is warehouse automation, what Dominic has been referring to. Warehouse automation and equipment is becoming increasingly a big part of our CapEx. When you look at the building today, some of our newest warehouses have the 2/3 of the value of that building, or more, is in the automation and not in the building itself. So I would say, that's looking back. Working capital, it's also been said, TVH is a strange animal in some ways when you look at it from the outside, but the way we look at it is inventory is key. In the aftermarket, inventory availability is absolutely needed. We did not stop and did not cut back on inventory in the last few years. We expanded our range. Expanding our range means increasing inventory, and it's been paying off in I would say, particularly in the last 18 months, for various reasons, that the availability of our parts actually has driven our sales, nothing else. So today, when you look at our overall working capital, 43% is, by all standards, a high ratio, but it's something that I would say, that's part of our DNA and of our business model, and I would say today is maybe slightly above our historical levels, but we're very comfortable with that number. Net debt, we are at 760 net debt, so very comfortable at around the 3 times EBITDA range. So overall, I would say nothing exceptional. Now, a few words on the ambition. The first one is about turnover. So our long-term growth rate is 8%. That's what in the plan. You've seen the market growth, you've seen our historical growth. In fact, what we're saying is we know how to deliver growth. We've always been able to do that, and we will continue to do it. It will come from the largest part in absolute numbers from MPA, but also from the faster growing other segments. This 8%, I should say, excludes any additional uptick we could get from, I would say, price increases. So if we need to, we'll increase the prices, and that will create additional growth. And of course, M&A is an additional booster. Overall, our EBITDA margin, long term, we say above 18%. That's the main goal. And also, I mean, as you can see, we are able to get that number. CapEx continue to be at 3 to 5%. We are a growing company, so CapEx is, I would say, an important part of the way we will allow that growth, and so we continue to invest by 2025. Working capital at the 43% I just mentioned is even for us on the high side, so we see potential for driving down to below 40%. And then overall on cash flow, so we have a ability of cash conversion which is quite high, and overall, I would say our free cash flow is expected to grow in line with EBITDA, so around 170 million by 2025. And a few words on our first quarter. It's, I would say, not surprising if I've seen the numbers of the other companies this morning, but we've also had a very, very strong first quarter. And so overall, we are growing 24% versus last year. Of that, the largest part is pure organic, 16.5%. We have an additional booster from the strong US dollar, and we hope that, I would say, that continues to be the case, because it's a nice, I would say, add-on. Yeah, that's, I would say, not depending on us. And then lastly, we have the effect of inorganic growth from acquisitions we did last year. March was the best month ever in the history of TVH. And so on a per day, working day, we are at an all-time high, which is a good indication, I think, of how the business, the speed at which we are continuing to work. So if that continues for the next few months and the next remainder of the year, we'll have a very nice result. And overall, if you look at markets and segments, America stands out. There's a bit of a US dollar effect, but just generally, America is doing very, very well. EMEA as well. EMEA sees generally a very first good quarter. Having said that, we are also active in CIS, Russia, amongst others. And it's clear that, I would say, we're seeing a March that is much lower than January and February, and there will be some effect from that for sure. So that's, I would say, the main thing on the first quarter. Of course, I would say I did not include the bottom line here, but I can say that the bottom line as well, I would say, is as good as the top line.
Thank you, Mark. Thank you. So 2022, what keeps us busy, and maybe some other takeaways. That's how I would like to finish. I repeat what you've been hearing, and I say what you know is that it's complicated times in which we are working at the moment. So it's complex times. So supply chain, it started in 2021, it continues in 2022. Inflation, the same, it started in 2021 and it continues in 2022. And on top of that, as Mark has mentioned, we have the war in Ukraine and Russia. So we have to navigate through complex times. At the same time, we keep focusing on bringing the growth in the market in which we play. And so the markets are good, the markets are strong. We definitely have to continue. We have a strategic plan. I think it still stands. Nothing is happening that makes us doubt about the strategic plan. I would say just execute. Might be oversimple, but that's what it is. Try to explain to the teams, try to repeat to the teams what makes the difference, what makes us successful, and drive it. TVH Innovatis is definitely on the agenda. It's a big program. MPS an employee engagement score, the service, and we are a service business, so that is important. So keeping focus on what makes the customers happy, keep focus on what makes the employees of TVH happy, and in the end, we believe we can deliver the results. At the same time, we keep watching for opportunities and strengthening and build the TVH organization. What do I mean with that? We see the growth. We have to win the war for talent. We still have to attract lots of people to be able to grow. Key takeaways. I bring you the 3 buckets immediately because time is ticking. So because of the fact that we are playing in different regions, we have core regions, and in different markets, I think that's an interesting combination. So there is always one market doing better, there is always one region doing better, but in the end, these markets are growing markets and big markets. We want to make the difference, so we aim where we can be a leader, or we aim or we work where we are the leader, and if we are not the leader, we want to be the good challenger. We have a proven business model. Keep on working is the mantra. Mark explained about the financials. Yes, COVID hit us. 2020 was not the best year. After the financial crisis, we also had a dip, but all in all, we are a resilient business, so we bounce back quickly. Growth is there. M&A can only fuel the growth. And of course, what are you without the team? So we good people, a good team, sustainability, and that's something you should keep in mind is part of our DNA. We keep machines going. So thank you very much. Not sure if there are questions.
Emmanuel Kalir Kempen. 2 questions I have. The first one is on the margins. But the margins are definitely very high if you would compare it with other kind of similar companies. Still, I think in your long-term guidance, I think you include a small margin dilution, if I got that right. So I would like to understand why that is. And the second question is on M&A. I would like to better understand a little bit how you create value with M&A. Is it because you can buy companies at a much lower multiple, and then you can increase profitability levels massively, or what do they really bring you that create value? Thank you.
Okay. So maybe on the first question, so the margin, so is there a tendency that it diluted? Go back to the fact that we work in 4 markets. Each of these markets has, first of all, a different price point and a different margin. So you have this mix effect. So if we believe we will continue to grow strong in MPA, but we believe that we will grow faster in some new markets in which we are active. And these new markets, they typically are at a lower gross margin percentage point. So in the mix effect, you have this slow kind of perception of erosion. We believe that absolute figure is also important, so that's why we said, okay, let's go for those markets anyhow. In the current economic environment, yes, inflation. We also impacted by inflation. So what we try to do on a daily basis, our teams are trying to, at a daily basis, try to find on a part by part basis almost, see where we can find an uptick, see where we have the room to basically increase prices. In the end, we want to sell, right? So in the end, we want to sell. So part of our strategic plan is that there might be some erosion, but we believe that in absolute terms, in absolute figures, the growth is there. The second question was on M&A. I think over the years we've done, give or take, 80 acquisitions, and difficult to say if you could kind of say that there is a perfect, what should I say, roadmap. We try to find a good company. We try to find a good company with good people that we can basically integrate, because in the end we want to integrate as much as possible. And integration could mean increasing our footprint, basically, and entering in a new market, or it could be acquiring talent that has a knowledge on a specific range of products or on a brand. So there is no one fits all. So that's why I can't give you a good, precise answer. But nevertheless, we believe that doing M&A is kind of a good booster on our business, because in the end, you can always you could argue and say, Dominic, you have within TVH there are enough people, so can't they basically do it? Can't you do it yourself? If you know how much time it takes to understand a certain market, if you know that it took us, give or take, I say something, 40 years to build our knowledge on spare parts for material handling, okay, we don't want to wait 40 years. We don't want to do it internally. So that's why we believe that if we find the right opportunities, it gives an accelerator to TVH.
What is the kind of multiple that you pay?
The one that makes the deal happen and still be interesting. I'm not sure if that makes you happy. Strangely enough, the aftermarket is perceived as an interesting market, so we are not the only one there. So there are several private equity players out there trying to find the good opportunities as well. Could vary 7, 8, 10 if you want to have a multiple. So if you think about it, that's not a low multiple for a small business that we sometimes acquire.
And in terms of profitability, can you move that up after the acquisition? Yes.
Typically, yes.
And how? What are the main components?
Depends whether you can integrate them or not. That's an important one. Sometimes we have done acquisitions that we kept them aside, trying not to lose the DNA of that business, and first try to generate some momentum. Try to grow maybe the business by itself, and then later on acquire them. So we've not always looked for the quickest gains. We again, acquisition by acquisition, try to make the right decision, the right strategy.
Hi there, Patrick Vermeulen. I've got 2 questions. First one is, if you look at the other, I don't know to what extent it's actually the case, but OEMs tend to try to capture more of the value chain over the lifetime of a product. So if you take cars, the OEM wants you to service the car with them, and sometimes it's contractually negotiated. So to what extent is that a threat for your business? And is it happening in the different industries that you're active? And my second question is, what are you doing differently since D'Ieteren came on board as a shareholder?
I try to start with the first one. That's the OEM. So I'm 20 years with TVH, and the story that you're saying is the story that I've been hearing 20 years. So everybody tries to do the right thing to try to grow their business. There are a couple of things. First of all, a customer typically does not have one brand only or one type of machine only. So that's kind of the fact that we play in different markets and could help a customer on different brands and different type of equipment is a differentiator. So that's one. Talking about the OEMs, so yes, they are competitors, but some OEMs have become partners. They see TVH as a partner because they also want to win the game, so they want to gain market share, and if they gain market share, they want to kind of, what should I say, try to serve machines of a competing brand. Difficult for them to go to the OEM of the competing brand to ask for parts, so they kind of say, TVH, can you help us? So that's kind of where we have a unique, what should I say, relationship with OEMs. So that's one. I think it's, and it's working well. I can only say that. But I think the main thing you need to remember is that a customer has a diversified fleet, or the customer, so a rental house is a clear example, or the customer of a customer has a diversified fleet. So if we can make it easy, we have the warehouse we have the inventory. They don't need to think about it. They just need to say, okay, I trust TVH. If I go to TVH, they have the part. It kind of makes everybody happy, I would say. Your second question is a delicate one. What should I say? It's no. I can only say no. I'm saying, Francis. I was kind of thinking if I say a lot or not, but I'm trying to say it has been a good journey. If I give you the answer, it feels like it has been there for many years. That's kind of how it is. So there is a good collaboration. They know the business. You clearly feel that they have a sense for what we're doing, and whether it's again on a board level or whether it's more informal, there are good discussions happening. So, and definitely they support what we try to do.
Yes, hi. Giel de Klerk, KBC Securities. I'm thinking, looking a bit at your growth trajectory, 8% organic. If I look a bit at the trends of the overall market, that's 5%. Should we consider the rest all market share gains, or
Yeah.
that's about it?
Yeah, that's oversimplified what it is, and okay, how you do it, that's another thing. But that's what we believe. It's a combination of trying to still be the market leader, trying to keep the market shares that we have in our core market, fueled with entering and maybe become a consolidator in the new markets in which we play. So all this together gives us a belief that we can deliver a higher than what you would think is the market growth in general.
Yeah. Maybe a bit of a tricky question as well, given that the deal is not closed, but your new shareholder recently also, or is at the point of acquiring another stake in PHE. Some say there are a lot of overlap or similarities between TVH and PHE. How are you looking at there? Where could the two companies, if the deal is closed, help each other out in terms of platform sourcing? Some view on that.
I'm sure if we will meet with the management of PHE, I think we will have a very interesting and inspiring conversations. How do they see the business? How do they make the difference? How do they accelerate their business? How do they digitalize their business? So I'm sure it will be good discussions to have.
Okay, great. Maybe one final question. You already mentioned that you automated the warehouses here in Waregem, also the one in the US. How many warehouses are there that still need to be updated in the upcoming years, and is that already included in the CapEx guidance that you have, as you mentioned just before?
It's we have again in Belgium and in Waregem, in Belgium and in the US, we've invested already heavily in automation. So the discussions that we will have or should have is, okay, what's there to build to continue the growth actually beyond the strategic plan, because building a box is easy. Building the box with smart automation is much more complicated. So before you have actually the warehouse operational, it takes years. So, but we are not there yet. So the fact that we are actually going faster than what we had in our strategic plan, kind of, is we need to think about it. But I think the guidance that you have seen is a fair guidance.
Okay, so it would be included already.
Yes.
Yeah. All right.
Thank you, David Wegman, ING. First question on the, let's say, the equation between growth and margin. So as we understand, you're planning to grow faster than the market and take share. And I wanted to better understand, how much of this share is rather in material handling, so your core market. But I understand you also see faster growth in the other segment. So, and we understand that it's dilutive for margin. How should we think about that equation? So growth versus margin, even beyond the current, let's say, four-year plan. So beyond 2025, what are the kind of the initiative that you can take to improve the margin in the new segment and the core business, let's say in MPA? That's my first question.
So the fact that, remember we have a large pool of suppliers. So entering into a market is something that goes in with evolution. So you're not always automatically, immediately with the best supplier. So you typically go through a journey where you might buy from suppliers that are not always at the best price point, but still you want to buy from them because still you want to give a good service to your customer. So that's kind of where it goes in waves, and that we try to optimize, we try to do better sourcing. If we do better sourcing, you can basically protect your margin. But that's a journey. That's something you have to work on every day. So that's kind of where we believe it should all be very okay and potentially give even upsides at a certain moment. We have seen this in the past also. We have seen this if we, for instance, entered into the market of mobile elevated work platforms. It might be a niche market, but nevertheless, it's a good illustration. Initially, the margins might be compressed, much lower than you want, but over time, as you grow, and as you know much more about, okay, who actually could also manufacture the part for us, because that's what it is. We send drawings, we send specs, and they manufacture for us. Then your margin starts to see an uptick again. And that's actually what we will do, and that's what we have been doing for 50 years and continue doing.
And a very quick follow-up on that one. So do you see any structural reason why your new segment, if I could say, would be structurally lower margin than your core business in material handling?
We dare to say that because we collect a lot of data points, what the price points are. So we kind of can have a feel that it's actually a lower margin market, but nevertheless big markets. Remember how I think you saw it in the presentations. Those new markets actually have the size of our core market, so too big to let go.
And then, thank you. And then, second question on the technology. Do you see any, be it electrification or hydrogen, or do you see any need to make significant investment in the coming, let's say, 5-10 years that would require a step up in R&D, in reverse engineering?
Actually, the electric forklift already exists many years. So for us, it's not new. So it's already there. And yes, it might increase a couple of percentages, but we do not expect that it will materially shift. So in our core market, we believe it's there. So the IC, so internal combustion, will remain. And yes, maybe there will be a couple of more machines, electrical or warehousing might increase further. But it's not like it's different. Okay, lithium could be an interesting one. Where I think you have to see the change is that in other markets in which we become active, so like in the agriculture equipment, there potentially will be a drift towards electrification, or in the small earth moving as well. So I think there will be a bigger change. Okay, but electrification is not new for us.
Thank you.
If I may add, if you look at our product range, if you look at our product range and what we sell, engine parts is just one. Cabin parts, other parts are whether or not the engine is electric or not, will continue to would say provide business for us.
On the new market opportunities. Do you see the need at some point to do one or several very significant M&A acquisition to really accelerate the development, take an interesting position, and given that they are bigger markets?
The need, I think if we can do and if it makes sense, and if the board supports it, we would consider. If not, we just continue our strategic plan. That's, I think, what it is. So it's not so much a need.
But there are some nice targets.
Try to wrap up. One more question. We have to stop. Many questions. There will be more opportunities. Okay, thank you.
Hello. Yeah, it's Roberto Casoni from Rotus Capital. I had 3. I just reduced it to 1. Okay.
Thank you.
And welcome, Francis. My question is it's very simple. I mean, how inflation impacts on your margin. I mean, you present the story, and you also, if I saw correctly, you mentioned an intelligent pricing model. And if I look at your balance sheet, basically your net debt is not exactly equivalent, but it's very close to your inventories. Basically, you have 6 months inventories, basically, which is equivalent to 650 million. So if I'm not incorrect, I mean, you have been buying most of the inventories at the pricing point, which is possibly better than what it is today. So how do you deal with that? And it's important for me not to understand Q1 or Q2, but of course to understand the reverse of this trend. So how does it work, basically?
But first of all, we are fortunate that the OEM drives the price. So and for the OEM, it's important that the price for the parts is attractive. So for them, it's an important bucket of profit, and so we could kind of surf along. So that's an important one. That's probably the key one. Having said that, yeah, we also need to be, what should I say, acceptant and for the fact that the pricing is increasing of spare parts. And yes, we can't deny and we can't be in denial, and we have to just act upon it. So it's a mixture of both. So, but the one that you really need to remember is the first one is the fact that we don't set the price, we follow the price, and we see that in the current market, we see the OEMs heavily increasing the price, which gives basically a room for TVH to follow.
And it's also beneficiary for margins in the short term.
And helps on a lot of things.
Yeah. Okay. Thank you.
All right.